On All About Stocks this week, the RBI keeps interest rates unchanged. We'll tell you what your investment strategy should be. IT and consumer stocks shine as the rupee falls to a 7th-month low. We'll give you the best picks in the space. And our investment advisor, Sharmila Joshi, tells you why you should be buying Exide Industries right now. Welcome to All About Stocks, a show meant for long-term retail stock investors. We've had a truncated week this week. We've only traded for 3 days. Now, in those 3 days, the RBI decided to maintain status quo on interest rates, leaving a lot of investors wondering about when we're going to see that rate cut or if we're going to see it at all. Over the next half hour, we'll tell you what your investment strategy should be in these markets, and we'll give you stocks that you can buy right now to make the best returns over the long term. We're going to answer questions as well. Remember, if you have a question about your stocks, write to us. Email ID is at the bottom of your screen, and you can reach me personally on Twitter. It'll be my pleasure to hear from you. Let me first bring in my colleague Ajay to give us an update on all of the market action for the week. Ajay.
Well, Faye, it was another challenging week for Indian equities. The benchmark indices lost about 0.25% this particular week. In fact, fund flows were also muted to slightly negative. In fact, FI was seen selling and taking profits most days. This one, it was a truncated week, so the institutional participation was also low. At a time when large caps were relatively quiet and muted, the mid cap end of the market continued to witness active trade and brisk buying, and there was outperformance coming in. If you talk of sectors, you saw high beta sectors like banks, capital goods, even real estate for that matter, including some large oil stocks, continued to be negative and saw profit taking, whereas the defensive, the classic IT, pharma stocks, even mid-cap consumer stocks were seen outperforming in this particular week. Well, RBI governor policy was the most important event this particular week, and apart from the policy which came in more or less on the expected line, it was the commentary coming in from RBI indicating that any rate action or possible rate cut from the RBI would be data contingent, which gave an indication to the market that market was expecting some kind of a rate action in the first half of next year. But these kind of hawkish commentary, in a way hinted to them that even the pause on rates could get prolonged and the first of rate cuts could happen as far out as September of next year. That made the interest rate sensitive end of the market pretty nervous, and hence we saw big cuts coming in as far as Bank Nifty goes. Well, it will be the start of the second quarter earnings season next week with Infosys, and traders believe that that will be some direction giver to the market. Roughly they expect the Nifty to trade in 300-400 point range with 7900, which is also a 50-day moving average on the downside, and 8200 on the upside as the near term ceiling for the market. It was a buying of dips which was seen in some of the good quality mid caps, and that's the strategy which traders are recommending. In the medium term, they believe markets could remain jittery and volatile as well, because the big global queue was turning non-supportive, which was the sharp rise in dollar index. Globally, the dollar index has almost headed to 86 mark, which is a 4-year high, and which makes emerging market equities pretty volatile. So that was the big sword which was hanging on Indian equities. But net a slightly negative week, but buying on dips are being recommended by most strategies we speak to.
All right, Ajay, thank you for that update. Joining us in the studio, Sharmila Joshi, who's been an advisor with us now for 3 years at least. Sharmila, thank you so much for coming in. I want to first ask you about the RBI. I mean, it's obvious that the inflation numbers still don't make the RBI governor comfortable. But what worried me is that there were reports that analysts are saying no rate cut until September next year. Are you similarly pessimistic? Do you think we're going to have to wait a whole year?
I hope not, but as you said precisely, I think that's what worried me the most, because I think the kind of poll that a lot of media channels carried out seemed to show that there is a good percentage of people who think that they'll have to wait at least a year before they see a rate cut, and that indeed is very worrying, because I think then that really puts that would make you think that you need to put a lot of things on the backtrack, which you would think would start happening earlier, whether it is recovery in the infrastructure space, whether it's recovery in power as a sector, energy, banks. So I think a whole lot of things you would then have to rethink about if really that were the case. Personally, I think that you will have to wait at least till February, March of next year before you hear sort of a comment coming from RBI as to which way they see interest rate move, simply because I think a lot of what they have said in this particular month is based on the fact that they actually see inflation climbing back up to from where it has come down to by another percentage or so, in the next 2 to 3 months.
Very quickly. Now, we do know that crude oil prices have cooled off. Commodity prices have been on their way down as well. Why aren't we seeing the impact of any of that on our inflation so far?
We have seen it. That's exactly the point, that we have seen it, but RBI is a little cautious at this stage, and they think that it can actually go up again, because crude has come down substantially. As you said, we are seeing Brent at $97, $96, whatever, which is a rate we haven't seen for the longest time. And we are seeing that impact. I think we are seeing slightly softer inflation numbers, with a possibility that actually if you see the fact that monsoons were delayed, etc.
Yes.
You could see a more positive impact of that coming in the next 2 months. But I think they are very more worried about what happens in January, February going next year.
So tell me this: if we are approaching the market at this point, we were looking at a rate cut as a possible trigger for a lot of the rate-sensitive stocks. If that's not going to happen for at least 6 months to a year right now, what should we be looking at instead?
See, I think outright we don't need to look at PSU banks, because I think there the concerns are going to stay, and the fact that apart from the fact that we are not going to see a rate cut, also I think what has happened with all this coal blocks getting cancelled, etc., and the penalty now that these companies have been asked to pay, that whole thing is going to be in a limbo for the next 6 months. So and again, I think the kind of bad news flow simply that there has been for PSU banking as a space. So I think definitely that's not the basket that you need to look at just now. I think also you need to go slow on the entire metal and energy and power play, because there again is no solution in sight for the kind of problems that are surrounding them. Again, we haven't seen anything on the gas price increase. So I think that's going to be another subsector of stocks that. Sure. So what you're really left with is autos, where the numbers are good, and perhaps you are seeing improvement in a lot of companies, which are happening because of things that they've done internally more than anything related with news or with a new government coming in or with any policy changes. So if you are seeing companies which have sort of taken stock of what's happening with their businesses, bring down their leverage rates actively, and are now beginning to see some improvement in order flow, that's the basket that we are left with.
It's interesting you brought up auto, because I want to brief our viewers on the sales numbers. September auto sales numbers came out. Interestingly, two-wheelers have done better. Hero MotoCorp up 30%. Bajaj auto sales grew 9%. You have M&M in your portfolio. So I also want to ask you about Tata Motors and Maruti, where the exports were down 28%. Let's first talk about two-wheelers. Has this been impressive for someone like you? Do you think we should now be considering two-wheeler stocks?
I think so. I think that especially, Hero MotoCorp numbers are obviously, I think this is only the second month that they've really done this 6 lakh plus kind of sales. So it's a fantastic number for them to be at. Again, I think in the quarter numbers, I think if you saw, most of them have delivered really as far as numbers go. TVS Motors was a trifle disappointing because their margins didn't really reflect the kind of optimism that the sales numbers reflected. But perhaps that stock has the most in terms of percentage terms to go up, and it has actually sort of outperformed if you look at, like a year kind of a number. But the stock that I also sort of like in this whole thing is really Bajaj Auto. I think, the kind of clear-cut strategy that they have in mind and the kind of market that they're looking at, as well as the, when you listen to the management, it comes across that they've got this thing in place, and their vision is very clear, because they are looking at this big export market, and they're saying that motorcycles is the place we want to be, because that's clearly the bigger space to be in. So I think there could be upside on all of them, but as I said, probably at this point in time I prefer Bajaj Auto over the other two.
Let's talk about the four-wheeler market. You have M&M in your portfolio. We know Tata Motors has been doing really well, and then there's Maruti. If I had to ask you to choose between the three, is M&M still your favorite bet there?
Simply because I bought it at a good price. But I think, yes, there's a lot on the table even for a Tata Motor. So I think my order would be M&M, Tata Motor and Maruti.
Would it be fair to say that we might see consumerism in the country come back for this festive season? And in that case, and we've seen the consumer pack has done fairly well this week, in that case, does it make sense for us to take positions within consumer stocks?
I think so, and I think that there's this, I have been recommending Blue Star, because I think, that's the outright, I think, one of the beneficiaries. In fact, that whole basket, I think, if you see, it has done well. Whether it is Hitachi, whether it is IFB, whether it is Voltas, whether it is Blue Star, Crompton Greaves, whoever has talked about their sort of consumer business, they've all done well. Bajaj Electrical, I think you name it, and they've done well. So I think it could be a good time to sort of expand the basket and look at some other plays within that, like maybe a Titan, because this is the festival season. After a long time, you are seeing some sort of buying coming back into jewelry and gold as a segment, and they had a lot of concerns which are sort of gotten sorted out, with the gold import, those restrictions, etc. So things could in fact look better for the jewelry business of Titan, and therefore Titan could be a stock that you could look at going ahead.
All right. In fact, we take recommendations that Sharmila gives us very, very seriously, and I'll tell you why. I'm going to pull up her report card. AIA Engineering, she recommended on the 8th of August this year. That was less than 2 months ago when it was trading at 772 rupees with a target of 900 rupees for a year. It's currently at 945. It's crossed that target in less than 2 months, Sharmila. Should we continue to hold it?
I think so, because I think if you're a longer term investor, then you have really nothing to worry about, because I think the kind of business that AIA Engineering is fits in what I was saying earlier, because you're looking at a company which is sort of internationally placed. They are making abrasives which are used by the cement industry. You're not expecting like big ticket growth, but the fact that it is used as a replacement sort of a part and the kind of industry fit that it has makes it a fairly interesting company to be invested in if you have a year and a half's perspective in mind. So I would say just stay invested in ANA.
All right, stay invested. And Sharmila has brought us one recommendation again this week. She brings us Exide, which ended the week at 172. It's hit a 52-week high not too long ago. But there is, of course, a proposal to extend the excise duty incentives to the automobile companies beyond December this year. That will obviously help this company as it will help the auto sector. So we talked about the auto sector some time ago. Tell us if there was someone looking right now to buy, and if I don't have an auto stock in my portfolio, would you rather me buy Exide, or should I first buy an auto stock and then add Exide to my portfolio?
Interesting question, because I think the auto ancillaries have also sort of done very well. So I would say yes, buy an auto first, but definitely if you have a couple of auto companies, if you do have an exposure to a two-wheeler, you have an exposure to a four-wheeler, again, in a CV space, mixed space, then I think you can start looking at auto ancillaries, and there are a number of interesting stocks here. I've recommended Exide, but I also like a Motherson Sumi. I have recommended a JK Tyre, fortunately, much earlier before we saw this huge run-up. Amara Raja batteries, and I think one of the reasons why I like Exide is that this is not a stock that has really moved with the rest of the basket that well. So people have sort of preferred an Amara Raja to Exide, and there is a bit of a gap that's opened up between the two. Again, I think in terms of numbers, Exide's quarter numbers weren't that good. So which is when I think you saw that correction, and from that 52-week high, and you saw the stock trade lower. But I think that as you go ahead and you see this pickup in the auto numbers, I think a direct beneficiary has to be a stock like an Exide, and I think you can buy it with a target of about 215.
All right, it's time for us to take a very quick break. When we come back, we'll talk about Sharmila's own portfolio. We'll talk about stocks like SBI and L&T. Don't go anywhere. Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. Sharmila Joshi is still with us. She's helping us figure out a strategy for our long-term portfolios. It's time to look at Sharmila's own portfolio. Now, this portfolio was designed on the 21st of December 2012, and Sharmila has been making changes to it and modifying it since then. It's currently at an overall gain of 31.67% compared to the Nifty. That's up about 35%. So we are underperforming the Nifty by about 4%. Now, I'm going to give you a list of the stocks in this portfolio. There's L&T, IDFC, Dabur, Sensex, Ipca Labs, JSPL, Kajaria Ceramic, M&M, SBI. Sharmila, we did talk about L&T and SBI several times in the past, but we must talk about the fact that JSPL is dragging your portfolio. It's down 62% since you bought it. Do you want to make that change? Do you think it makes sense to hold on to it?
I think I should have made that change when it was trading slightly higher, maybe even 2 months back. This would be completely the wrong time, because I think now the worst is in the price, because this cancellation of the coal blocks has obviously hit this stock the most. So let's see what really transpires in the next 6 months, because I think the kind of feedback that you're hearing from the management, as well as it's sort of it's all a little mixed up, the picture, I think. So I think you really need to see what emerges, and how this e-auction takes place, and what is the final penalty amount at, etc. Before you take a call. But in any case, I think a lot of the negative is already in the price. So this would be completely the wrong time to exit it, even if we, in spite of the fact that we are seeing such a big drawdown. So I think I'll continue to hold, and maybe in the next 3-4 months I'll take a call on sort of tracking the news as to where this thing is going to go.
All right, so no changes right now in Sharmila's portfolio. I'm going to give you a recap of the stocks as they stand. There's L&T, IDFC, Dabur, Sensex, Ipca Labs, JSPL, Kajaria Ceramic, M&M, and SBI. If you have any questions about that portfolio, feel free to write to us. Our email ID is on your screen. We'll ask Sharmila to come back into the studio and answer your questions. Let's take a few questions. Sharmila Shahid has written in. He has 100 shares of Monet Ispat, which he bought at 145. He wants to know if he should hold on to that stock. It's at 76 this week, so he's losing a fair bit of money on this stock. What would you like him to do?
Again, I think, simply it's the same sort of this, because they also have to bear, some amount of penalty, and overall, I think this is a bad period for metals as a play, because, this news has hit metal stocks the worst, as well as I think if you look at commodity prices globally, there again, I think, the data out of China, etc., is not really adding too much cheer. So while there is a very good domestic demand and things can improve for these companies going ahead, simply at this point in time,